Hi and welcome to my channel. In this video I will continue second part or part 2 of implementing tax of Oracle Cloud. As you know that previous video we talk about from regime to rate. How to set up regime, what is the option there, what about setup tax status, jurisdiction, rates, recovery, non-recovery rates, the regime, the configuration, global owner, the legal entity, operating units, how to set the default rate, all of these things in the part 1. In this video I will talk about a lot of things. First of all, we will talk about tax rules, self-assessment like reverse charge mechanism or RCM. We will talk about tax determination factor set, tax condition sets. We will talk about profile options. We will also talk about how to stop tax for a specific transaction type, for specific modules, how to disable it, how to enable, how to turn off, a lot of things, registration type of suppliers, and self-assessment. All of these things we will talk about. First of all, we will talk about tax rule. Tax rules that its determination for tax can be configured as a simple process with all default values of the determination points. It can also be enhanced with the definition of tax rules to identify and process any exceptions to the common treatment scenario. The tax rules that are part of the tax determination process are organized into rule types. Each rule type identifies a particular step in the determination and the calculation of tax on transactions. The tax determination process evaluates in order of priority the tax rules that are defined against the tax configuration, setup, and the details on the transaction. As you know that what is there in tax rules? There are determination applicable tax regime and guaranteed tax, determine place of supply, tax jurisdiction, determine tax applicability, tax registration, status, rate, taxable basis, tax calculation, and recovery. All of this determination is included in the tax rules. For whatever determine, for example, tax applicability, you can create your custom rules for tax registration, tax status, rates, blah blah blah. It depends on your requirement. It depends on your organization business. Maybe I will not create any rules. Maybe I will only just set up the default rules without any complex or any of rules, either applicability, registration of suppliers or customers, status, blah blah blah. Maybe in some of them I can create my custom rule. For the others I will keep it as a default or keep it without any rules, and so on. For the tax rules, complexity of the setup can be classified as follows. There are 3 methods of the tax rules. First of all, no tax rules. As I told you that Oracle Fusion Tax uses the default tax status, tax rate, recovery defined for the tax. So tax rules aren't required. However, tax rate can vary by class of product, set up using tax exceptions, locations, party, and also applicability can still be controlled without the use of tax controls, such as through the party tax profile that you defined for a supplier. So as I told you, I will not, as a first scenario, I will not define any rule. Second scenario is a simple tax rule regime that the tax authority levies tax on your transactions at the same rate with simple set of identifiable exceptions like one party of the transaction only, such as to certain parties, combination of parties, product, transaction process, like middleware or middle tax rules, not a full complex or neither no tax rules nor complex. It's simple tax rules for specific suppliers, registration for specific products, parties, customers, suppliers, specific transaction type, specific modules, blah blah blah. The third one, as you see here, is a complex. This is a complex tax regime. In certain countries require complex logic to determine the applicable taxes and rates on transactions. Both tax applicability and tax rates can vary. For example, by place of origin, place of destination, party registration, status, service, product, combination of factors, all of this, it will be like a complex. So this is the third type or scenarios of tax rule. There is one tip that always try to minimize tax rules and set up for tax regime and the taxes. Tax rules are specific to tax regime and the tax. Thus, by minimizing the number of tax regime and tax, the number and complexity of the tax rules can be minimized. Another tip, move any complexity from the beginning to the end of the rule types and supporting setup. For example, use setup tax recovery rate rules in preference to setting up specific tax rate with individual defaults associated with tax recovery rates. So what next? For our tax rules, there are two, for my opinion, it's like equation. Tax determination factor set and condition sets. Because when you are going to create your tax rules, the system will ask you what is your tax determination factor set, what is your condition set. So first, before, if you're going to make complex or simple tax rules, first of all you have to define your tax determination factor set and assign it to your tax condition sets, and then go to tax rules to choose in which part you will apply this tax determination and condition set. We will see it later. As you see here, tax determination factor is an attribute that contributes to the outcome of tax determination process, such as geographic location, tax registration status, physical classification, account combination, product category, inventory product, non-inventory product, transaction type, module, a lot of things that are there, you can use it. As you see here, tax determination factors are categorized into logical grouping called determination factor classes, accounting, geography, registration status, a lot of things. Tax class qualifier, there are also another part in during to define tax determination factor set is tax class qualifier. It's qualifier with a determining factor class when it's possible to associate a determining factor class with more than one value of the transaction. For example, you need to specify which location type, such as ship to, bill to, ship from, bill from. As you see, or as you know, that ship to and the bill to, ship from, some of them is for in customers, others for suppliers, and so on. Determining factor name. Each determining factor class contains one or more determining factor names that constitute the contents of the class. For each tax determination factors set and condition set, you have to give them name, because as I told you, you have to define, you have the ability to define a lot of tax determining factor set and condition set. There are four parties or four P's for tax determining factor set and condition set: party, product, process, place. As you see here, party means legal party physical classification, registration status, party physical classification like either legal entity or suppliers and customers. This is the party part of tax determination factor set and condition set. Second thing is product. As I told you that you have inventory product, you have non-inventory product, you have product type, and so on. The process, there are a lot of things: transaction type, line class, transaction or tax classification code, accounting segment, transaction physical classification, categories, all of this. The place is geography or user-defined geography. The determining factors are entered at transaction time. So again, now for example, as a party, registration status. So I can create rule for registration status, but before of that I have to define the registration status, either foreign, local, registered, not registered. And after that I have to define tax determining factor set and the conditions. In my tax determining factor set I will put registration status and the condition set if registration status equal foreign or equal local or equal not registered, then the system will calculate tax or not. This you will be put it in tax rule. Again, for product I will define a catalog in Oracle Fusion, then I will define a category and I will assign a specific items to this category. Why? Because I am going to calculate a specific rate for this category. I am going to calculate no tax for this specific category. The process, I have a specific account, I need the system don't calculate tax of this account. I have a specific transaction type in payables. I am going to tell the system please don't calculate tax for it. Or place, either a specific place, because this place we will using in self-assessment tax or reverse charge mechanism. As a geography, because almost of us using geography, or like for who are working in US, they can using state and a lot of states instead of geography. Geography, as we said previous video, like a specific country. So let's get into application. Now I am already logged in Oracle. Before I going to tax rules and tax determining factor set, first of all I am going to define tax registration. Tax registration for the suppliers, because as you know that during define the suppliers you have to assign registration type, either registered, not registered, local, foreign, blah blah blah. So first of all you just make tax lookup, manage tax lookup codes, just use common tax component. You can search, and you can also mean here in meaning just search by registration. You will find a registration status. In registration status you can go to down, you can define whatever you want: foreign, free zone, not registered, registered, because now I am going to create a rules for example not registered. If I assign the not registered as a registration status to my suppliers, please don't calculate tax. If assign register, please calculate tax, and so on. So here, how to define the registration status, you have to using this lookup to define your registration status. Then you have to assign this registration status to the supplier, right? I will duplicate. So I will go to procurement, suppliers. During define the suppliers, for example any, I will select any existing. There is one tab for tax. Tax registration status. What is the tax registration status? Here, transaction tax and tax registrations. And for here you will find whatever you define there in the lookup, you will find here agent, foreign, blah blah blah. So I define the registration status. I assigned the suppliers either through FBDI or one by one or whatever, and I came to my suppliers and assign it's registered, not registered, and so on. So now if you are going to define a rule for registration status, in case of the registration status is not registered, so the tax applicability will not be applied. So for the tax, just write tax. As you see here, you will find tax determining factor set, tax condition set. In tax determining factor set, we will put what? We will put registration status. In the condition, if the registration status is not registered. In which part we will put, please, if this status is not registered, don't calculate tax in the tax rule. So in tax determining factor set, again selected, it's already defined before, so I will equal to, I will find registration status. For example, this sir, let me in case I am going to create a new one because it will not be clear. For example, here I will make register, non-register supplier. Okay, I will take it, copy here, tax rules, it will using in tax rules. Are you going to assign specific ledgers, or it will be a general or a common configurations? So you have to assign or keep it null because it's not mandatory. What is the determining factor set? We set registration, so I will select registration. What is the tax qualifier? Tax qualifier means we said that there are a lot of place of supply. Place of supply means ship to, from, bill from, ship from, ship to, and so on. In the suppliers, in some cases you will ship to, ship from party, ship, or bill to party, or bill from party. Bill from means that you will receive a bill from suppliers. Ship from, you will receive a shipment from. Bill to party, you will send the invoice to the, for example, customers. Or ship to party, you will ship your product to party, and so on. So you can, for example, ship from party. I will ship from specific party. What is the determining factor name? Registration status. Because I selected registration, only there are only determining factor set name registration status. In which part I will put registration status foreign, registration status not registered in the second part as a tax condition set. If I define this, خلاص, save and close. Second part of my equations is tax condition set here. I will come here and again create. As I told you here, the system will ask you what is your tax determining factor set. So you have first to define your determining factor set before to define tax condition set. I will put the same, it's just like example, and I will put here the same whatever I defined. And here registration status equal or not equal or blank or between or whatever, I will set equal to whatever you defined in the lookup of the registration will become there. For example, registered. So then go to tax rules to include this tax condition set and the tax determining factor sets, and put in which rule you will apply this. For example, for applicability, it will not applicable, and so on. So I will cancel. Done. For tax rules, manage tax rules. As I told you, there are a lot of things. Manage tax applicability, place of supply, direct tax, recovery, taxable, blah blah blah. Now you define the tax determining factor set, tax condition set for registration type of the suppliers. So in which part here you will make custom your rule. Are you going to make a specific rate for this registration status? Are you make a recovery rate? Are you make tax calculation rules? Are you make applicability? Applicability means what? If the system found the registration status is not registered, so the system will not calculate or not apply the tax for this status. So I will select applicability, try to search. There are a lot of things. For example here, unregistered supplier. You just came here, define your rule, what is the code, what is the name, what is the start date, and the system will ask you to assign the tax condition set, which you already defined before. Where is the result? Here is the result. Once the status equal to not registered, please not applicable or not apply the tax. Again, if I need to create a new one to be it clear for you, I should select tax applicability and click create. What is global? We define global, right? What is the rule name? What is the rule code? What is the tax regime? If you have a lot, you have to specific. What is the start date? It's like regime start date. What is the tax? If you have a lot of tax, you have to choose a specific tax which is related to tax regime, because last time we said it's like a sequence. Regimes, tax status, blah blah. Are you going to assign to event class? No. Here, what is tax determining factor set? You have to select it. It's like a list of value. I am going to select, for example, unregistered supplier. For example, this, but this we didn't continue the conditions, so I will select AG. This bill from registration status, blah blah blah. Then try to continue, because once you continue, the system will ask you what is the tax condition set. Continue. Again, I will select the other one because some of them is working, some of them not working. Next. Determining factor is already, because it's already associated before, so no problem. I will select my new one. I just to show you that here registration status shift from next, so I can come here to select the condition set, and what is the result? If the system found the registration status is not registered, the tax will be applicable or not applicable. If it's you define a tax determining factor set and the condition is not applicable or registered, so it will be applicable, and so on. So this is the result. This is tax condition set and tax determining factor set. Again, I will come back to tax determining factor set. For example, here define a new one to show you what else we have here. Now I have for example accounting. What is in accounting? Tax qualifier is not required, so maybe you found it, you will not found it. Here there is no any tax qualifier class for this account. What is the determining factor name? Line account. So here I am going to create a specific rule for a specific account. So I have in tax determining factor set to define the accounting and the line account. Once I defined, I go to next type, for example here account, save and close. Enter a ledger, no problem. I will select ledger, save and close. Done. Tax condition set, I will create again account, account, and here I have account. Same here. What is your account here? Condition. So you will put a specific ad and account and put your account. The system will ask you which account. So this is another example to how to make a create rule for account. After that, you have to come back to the tax rules and say, for example, here manage tax rules. Which type or tax rule type are you going to make a specific rate? If the system found this account, it will apply a specific rate, or again it's applicable or not applicable. If applicable, not applicable, select it and add and enter all of these things. And again, what is your tax determining? You will select account. Next condition, you will put account, and again the result applicable, not applicable. So what else? What else? Tax determining. So again you have specific document. You have, for example, product inventory linked, because as you know that we have two categories or two products, one of inventory, one non-inventory. Non-inventory here means service, consulting, cleaning, like this. Inventory is inventory, so you can define catalog, then category, then assign a lot of or specific items to these categories. So come here to make your rule or condition sets depends on your categories or blah blah blah. Are you going to make transaction physical classification, transaction generic, specific transaction type, and a lot of things here. So this is tax determining factor set, and this is tax condition set. This is the main part of the tax rules if you are going to create not a complex but a simple or half complex of tax rules. Here you have to define a lot of tax determining factor sets, a lot of tax condition sets, depends on your business requirements, and then go to tax rules to define the tax rules. Again, I can come back to tax rules. Manage tax rule. First of all, you have to take care between transaction tax and withholding tax, because to define or set up withholding tax from the same path, but instead of select transaction tax, you have to select withholding tax. Last time we defined until the rates. Now this is the tax rules. Tax rules, first of all, what is tax applicability rules? Are you going to define specific rules to tax applicability rules? Yes or no? If yes, you just click search to see all of the existing. We have to define, for example, line not applicable, unregistered supplier, advanced B2B, whatever the condition set, you can come. What else? Place of supply rules. Place of supply rules that you define or ask the system or tell the systems that all of the location of all of my supply of rules, because we in the previous video we defined what our country for UAE. So I came here to define is the shape 2 or build 2 or whatever, it will be equal United Arab Emirates, it will equal India, equal United States. So here for the place of suppliers, place of suppliers, you tell the systems which country will be the geography. And again, for this place of suppliers, you will define what? Tax determining factor set, tax condition set. In this case, what is the tax determining factor set? We will select geography. Geography means country. So when in conditions, you will put operator equal to India, equal to Egypt, equal to UK, blah blah blah. And they come here for place of supply, put tax determining factor set which is assigned to geography, which is already by default country, and put the conditions bill from, because we said either there is one ship to, if ship to, no, if no ship to, so select bill to, and so on. For place of supply, I just need to give you as you see here, this is our place of supply. Place of supply bill from in order to cash means legal entity address. طب if bill from for procure to pay supplier site header level address. Ship from in order to cash warehouse address. In P2P supplier site header level address. Bill to in order to cash customer site bill to address. In procure to pay business unit address. Ship to customers, ship to location. Ship to use bill to if ship to not found customers, and ship to location at line 5. This is the meaning of the place of suppliers in order to cash, O2C, and procure to pay. And again, as you see here, bill to I will send, so customers. Ship to also I will ship product, blah blah blah, customers. Bill from supply, ship from supply, and so on. So here for the place of supply, I think it's there is no differences between e-business tax and Fusion. You can here bill from, ship from, or you can use the third one, which is general, ship to, use bill to if ship to not found. So this is the country. Because in self-assessment, when we talk about it, this place of supply is the main point of the self-assessment tax. So I will click on done, and again also take care of the dates. The dates must be equal regime date or after the date. It will not be before the regime date. If you remember, we put 1st of January to 2018. What else? Direct tax rates. If you have specific direct tax rate rules, you will define. If else, if you don't have, so keep it. Recovery rate. Are you going to define a recovery rate? Last time we defined two rates, type of rates, recovery, non-recovery. For the recovery rate, in some cases, you have to define recovery rate. Tax recovery is the full or partial recovery of tax paid on purchases by registered establishment to offset the tax collected from sales transaction. There are usually main regulations surrounding the details of tax recoveries. Depends on the laws or whatever. For example, there are some products is recovered, some other product not recovered. For example, if the purpose is entertainment, is personal tools, whatever, is not recovered. If it's, for example, school, for example, transportation, medicines, so it will be recovered. So depends of that, you can define also a specific tax rules, depends on recovery rate rules. Again, you have to define tax determining factor set, condition sets for a specific product, for a specific category, for a specific transaction type, and so on. And come here and define your tax recovery rate. Taxable basis, this is the other one. Also, you have to, if you remember in e-business, you can define the standard one as a TB. For example, if you don't have any taxable basis, you don't have to need it. Tax calculation rules also, if you don't have, you can define the standard one as a TC, if you remember TC and the TB. Tax rate rules, are you going to define a specific rules for tax rate? For example, I'm going to make specific categories to use a specific rate. I am going to use, for example, as you see here, there is one gift category we defined as a condition set under the tax here, accounting line account, we put a specific account, and for this it will be used which rate, the result input non-recoverable rate, because we select tax rate rules, the result will be all of our rates. If you select tax applicability, you will, if you remember, the result will be either applicable, not applicable. If you select, for example, registration or recovery, it will be here result for all of the rates of recovery, and so on. Again, you have to define. If, for example, here he said that there is one gifts category, he define category and the catalog and assign specific items to the category, and come here and go to the remaining factor set and define accounting and line account as we did before, and he assign a specific account and make a condition that if the system found this account, so the result will be this rate, and so on. It's like, if you got the requirement, you just apply this requirement in tax conditions, tax determining factor sets, and come here to select which rule type you are going to create it. For tax registration rules, it contains information related to parties, transaction tax, obligation with tax authority for tax jurisdiction where it conducts business. In some cases, single location may need to fill or file multiple registration. And if you search, as you see here, we have free zone, we have for example local register. So in this local register, he select country and registration status, ship from, so the result will be ship from. You can define all of registration. I have foreign registration, local, whatever, and so on. If you are going to make applicability and not applicability for the registration status, you have to go to tax applicability rule, and so on. What else? We have tax status rules, as we said, that you can define as a TS or as a standard, as a default, without any define specific rules, or you can keep it that this is set up the required tax status that you need for each tax that you create for combination of tax regime, tax configuration, more. So I think this is whatever for each of these. For example, direct tax, if I click search, I didn't define anything, so it's not required, but applicability is required, place of supply, rates, registration, all of these things is depends on your requirement or business, or depends on your business scenarios. Once you define all of these, again you have to come back to the tax. If you remember, tax, manage tax. Here, manage taxes, select your tax and enable search and select your tax and enable what? Enable this, enable tax for transaction, enable tax for simulation, or whatever. Because once you complete the setup from regime to tax rules, you come here to enable tax for transactions. After that, you will start to using tax and check the result, blah blah blah. There is some things or some question like for the operating unit, as I told you during define the tax regime. If I make here tax regime, if you need to disable calculate or applying or applicable of the tax for a specific operating unit or legal entities in tax regimes, if you remember, you decide which level you will work, either legal entity or operating unit, as you see here. If you here, for example, legal entity, so I can come here to disable Disable means so I will not this tax will not apply or applicable for this legal entity. If you decided to work on a business unit, again you come here and disable, so the system will not see this operating unit or legal entity during calculate the tax. Another thing that manage application tax option, as you see here, that you can select which, for example, business unit, which is application, for example, payables. Here you will defaulting order. Defaulting order means first defaulting order 1, please check the invoice header, please check the supplier, check the supplier sites, check the expense report template, reference document, and so on. Default order 2, first here as a supplier, then supplier side, then invoice, and so on. For the purchasing, again, please check first the item, then check the suppliers, then check the supplier side, like a precedence. First of all, item. The item is very important for me. Then go to suppliers, then go to supplier side, or item, supplier side, then supplier, and so on. What about expenses? What about project billing, receivables, and so on? This is, you can tell the systems in which order he first checks the application of tax options. What else we can using? There are a lot of profile options, but before going to profile options, no problem, let's start by tax profile option. Again, common tax components. There are a lot of profile options that in some cases the users ask you that I cannot modify or make amendment of the tax which is calculated on the AB invoice. In this case, you have to come here, as you see here, who can enter manual tax lines on the transactions, specify whether tax blah blah blah. For example, who can enter manual tax lines on the transaction that allow these updates, and they make updates. I make my user. In case of I select no, okay, and save. So I will go to create invoice to show you the impact of this profile option. I go to payables, invoice. I will create invoice. I will select operating unit. I will select supplier. I will number, amount, and dates, for example March or whatever. Lines here I will put, then I will select account, then try to save. And try to calculate VAT. Here the VAT is 0. If this registered, it will calculate VAT. So in the tax here, I am just clicking on tax, try to edit tax. Here, the impact of these profile options to enable or to give the users to make any adjustment for the amount or the rate for, and also here rate name, after the system calculated tax. This is, I think the impact is not reflected because I have to log out and log in and so on. So this is profile options to give the users to make any amendment of the tax after the system calculating tax. But I think it's not legal because the tax reporting whatever, it will not be matching, and here the system by default calculate 5%. It depends on these amounts if the user change it, so this percent will not be accurate. So now in some cases you need to define or make tax invoice only without item, without expense, whatever. In these cases, as you know, that there is no line type tax. You have only freight, item, I think miscellaneous, but you don't have tax line type like e-business before. So in this case you will make what? I just click on the lines. I can create one amount with 0. Okay, and try to save. This is the amount of the tax. I put amount here in the item is 0. Then I go to tax and make edit and put the same amount. Save and close. If you notice here the tax, and there is no items freight miscellaneous. Why? Because here there is no tax like before in e-business, and also you cannot add any line type as a user defined line type. So this is, I don't know it will be legal or illegal in your organizations, but I use it the same way before. Just create one line with zeros, and in this one line I edit my tax. So by the end the tax amount here like it's calculated but is not calculated. This is like tax invoice only without items or miscellaneous or freight or blah blah blah. Let's check what next. Self-assessment tax. This is tax for purchase transactions are usually calculated by suppliers and included in the invoice. Responsibility of collecting and remitting this tax to the authority lies with the supplier. However, in certain cases, suppliers doesn't have presence nexus or isn't registered in customer location. For example, a foreign suppliers. This foreign suppliers is out of your country, so it's not registered in your country. So the taxes applicable in such cases in the customer location are self-assessed. Self-assessment means, unlike supplier-assessed taxes that are paid to the supplier, self-assessed tax are remitted by the purchasing organization directly to the tax authority. So this is like relation between purchasing organization and the tax authority. There is no relation between the supplier and the tax authority because this supplier is registered where out of customer location or isn't registered in the customer location. The key here is that these taxes are to be calculated in the same invoice, but the taxes don't impact the amount payable to the supplier. Instead, it should be accounted for as a tax liability. It's like two lines for this tax on AB invoice. One debit, one credit, so the net is 0. But by the end, these customer or purchasing organizations will be remitted directly to the tax authority. Again, terminology used for self-assessed tax vary by tax regime, such as reverse charge, use tax and offset tax. Reverse charge is a terminology primarily used in Europe and use tax in the terminology used in United States, offset tax, and so on. Tax must be self-assessed by purchasing organization when the supplier is not registered. This self-assessment tax is only in payables, doesn't impact receivable transactions, so you can create tax registration rules depends on the location of the suppliers. So again, just come here and cancel, set up for the tax registration, manage tax registration. You will select, there are a lot of things here: legal reporting unit, third party, and third party site. Third party, as you know, suppliers and the customers. Sites, supplier sites, customer site, blah blah blah. Legal reporting is the legal entity. So what is your legal entity? If you define in your regime as a legal entity, so you have to do like this for all of your legal entity or for a specific legal entity. If I make edit, you just came here, what is the tax, what is the tax regime, tax name, what is the tax registration. As a default, it will be registered. Registered means what? If you define a suppliers without any registration status, the system will consider it as registered. What is the start date? What is the authority? What is here? Set as default registration. Default registration means if you define supplier without any registration status, the system will consider it as registered if the country equal to your geography or place of supply, as we defined before. Because last or previous videos we define our country for all, because we define geography. Once you select in regime, the type is geography, not a certain of states, the system will ask you which country: India, UK, Egypt, Philippines, blah blah blah. Here the option to self-assessment reverse charge. So the combination for calculating self-assessed tax is not like registered, and the country will be out of your geography country. In my cases, we defined UAE, and this is the place of supply. So in case of I define any suppliers out of UAE, it will considered as self-assessment tax as a reverse charge and is not registered. So again, cancel, done. If I go to suppliers, okay, and I will select one foreign suppliers. Foreign means what? The country of the suppliers is out of my geographic country. In my case here, what is my geographic country? UAE. So I will select suppliers not in UAE, in any other country. For example, I defined one before, this one, Oracle, and in the address I select Afghanistan, as you see here. Okay, so now I will create one invoice to check my tax rule or whatever. So I will select business unit, supplier site, what is the number, what is the amount, dates, and the lines, the same amount. Conditions, try to save, try to calculate VAT. As you see here, there is no VAT. Try to validate. It's validated. If you go to tax, you will find the tax amount, but this tax amount is considered as self-assessment tax. Because what? Because the jurisdiction's geography of these suppliers is out of my geography country. If you try to edit tax, you will find that it's self-assessed, because I have the option to enable or disable, that the users can disable or whatever. Cancel. Type what is the accounting impact. Just try to count in draft to check it. Here, view accounting. And as you see here, self-assessment debit, self-assessment credit. So this is the accounting impact of the self-assessment tax. So this will be the organization or purchasing organization will consider all of the transaction for self-assessment tax to remitting them to the tax authority. In this case, the suppliers will not make any, or there is no any relation between tax authority and suppliers, because the suppliers is registered out of the country. This is self-assessment tax. You have to check the geography, place of supply, and whatever the foreign or out of this geography is considered as a self-assessed or reverse charge mechanism. And also you have to go to define the tax registration for your legal entity and enable self-assessment tax, and you can put there the registration status, either registered or whatever. I think now you have to got some idea for tax rules. I think is the main part, tax determining factor set, condition set, how to make invoice with tax only, how to make invoice or rules depends on registration status, depends on account, depends on category, whatever. And also you can if you 1 second. So this is the tax rules, and there is another part that manage configuration owner tax options to disable, enable tax for example, as here what is configuration owner, either global or a specific operating unit or business unit. You can choose, for example, a specific operating unit. And what is the event class? For example, I am going to disable tax for credit memo in receivables. I am going to disable debit memo in receivables, expense report in payable, purchase order, purchase requisition, adjustment journal. Once you select whatever you want, for example, prepayment, in some organizations they said we will not apply or calculate tax for the prepayment invoice. So you just go to configuration under tax options, select prepayment, and came here, allow tax applicability, no. This means the system will not calculate any tax for event class prepayment invoices. In case of you need to disable or make tax not applicability for specific modules, so you can come here and select all of the event for these modules. For example, receivables, so I will select all event class, invoice, debit memo, credit memo. For payable, again, expense report, prepayment, invoice, credit memo, debit memo, and so on. For the inventory management, for the purchasing. So here, the area to make the tax applicability or not applicability, either for a specific transaction type or for a whole or a full module. I hope now to get something about tax rule, profile options, tax registration status, geography, place of supply, and thanks for watching.